Make sense of where the minds of investors are right now. Brenda O'Connor Juanas joining us. She's Senior Vice President, Financial Advisor at UBS. Great to see you. Thanks for joining us.
Thank you for having me, John.
When you're talking to clients right now, I mean, is this kind of stuff coming up? What's the general mood right now?
I would say when we're trying to make sense of what the market is telling us today, you really have to look at a few places. First, inflation is cooling and may have been last year's story. Number two, the banking sector is stable, and that is showing us that an imminent recession, the probability of that is low. And that thirdly, the Fed may be close to being done. And so it's no surprise, John, that with this backdrop, risk assets are rallying. Global stocks are up 10%. But here is the thing, that even if this earnings season is benign, U.S. stocks, and specifically the S&P, are trading at over 18 times. That is incredibly expensive. That's without any kinks to the narrative. And so we just think that there are better places to invest. And by better, I mean fixed income. I'm looking at real assets and things like non-U.S. equities.
So it's not that you have to be defensive per se or completely cautious at this time. It's just the fact that you have seen a lot of valuations for U.S. equities perhaps look a little pricier than other pockets of the world.
That's exactly it. And so one of our big calls, for example, is non-U.S. equities. Look at European stocks. They're up almost 18%. And, we have to think about this. Global markets are no longer moving in tandem as they were 12 or 18 months ago. There are specific issues to the U.S. that they need to work through, including faster declining earnings. And again, stocks are just expensive. So the probability of a downside surprise at these levels was more likely. Now, you compare this to other regions, and from a valuation perspective, you can have up to a 40% discount. I would put Canada in here as well. And so from a sector perspective, we like things like Asian semiconductors. And from a geography perspective, we're looking at European stocks, specifically German equities.
And we had a board that we just showed for our television audience highlighting some of those equity options. Also, you mentioned making a case for bonds and real assets or alternatives. What are real assets or alternatives?
Right. So in terms of market performance this year, yes, stock markets are up, but we think that investors are going to have to get the returns elsewhere. Fixed income is definitely one of these areas, and we can talk about that more. But real assets, alternatives, those are other areas we're looking at. In terms of real assets, we're quite bullish on broad commodities. We think WTI is going to go above 100 by the middle of the year. Gold is something that we're looking at. UBS just increased this call to preferred. And you and I have talked about alternatives in the past, and really the thesis is just the same. With these dislocated markets, these types of markets produce productive and attractive vintages, specifically in private equity. So within private equity, we're looking at things like secondaries, distress strategies, things like that.
So before I let you go, Brenda, if, for example, you think oil could make its way to $100, with all this talk about a recession, do you think maybe that is overblown?
I do, actually, because the oil dynamics are not just about recession. There is a fundamental supply-demand disconnect that we've seen embedded in the global oil markets for years. And so we still think that even if you have a recession here in North America, oil prices will stay solid. Look at what OPEC is doing. Look at the fact that China is expanding. They're expecting, not skyrocketing GDP, but certainly above 4 or 5%. And that will continue to fuel demand for commodities. And I would put WTI and oil in there as well.